Alright guys, welcome back. So if you followed the last video, you can see we finally did come down to that 80k level I was discussing. That is the previous year's value area high. Had a nice reaction. We're being capped currently by the developing value area low for the yearly. So where can we expect price to go from here? Where's sort of the bull bear line in the sand? Can we expect a ranging or trending period? I'll cover all of that in a bit. But before I do that, please like, subscribe to the channel, and let's jump into it. Alright, so first up in terms of macro events this week, we do have PPI and unemployment claims coming up in 2 days. So, naturally you might see a bit of de-risking and chop into that. But sort of chop is the name of the game right here. We are in a ranging market. And the reason for that is, let's just switch to the yearly. So as you can see, we came down to that level I was discussing, had a very nice buy up there, and we're now being capped between these 2 points. So what we can expect after big sort of volatile moves down like this, we can expect a range to form. It's unlikely we come down here and then shoot back up into the highs. What's likely to happen is we get a period of bracketing like this. Now, maybe we come down, we sweep some lows, maybe we go a bit low, maybe we come up, sweep some highs. This is just sort of what we're going to play. And this is actually excellent for us. Don't despair that the market's over. Like, the market's still giving opportunities. And these opportunities are in these ranging markets because you have very clean levels to work with. And you can have quite tightly defined risk based on those levels. So yes, altcoins look terrible if your portfolio is down from all-time high, lose the value that you had at all-time high. That's gone now. We need to focus on what we can do here. So yes, like I was saying, alts are looking bad, but if we do get some sort of sustained bounce in the market, potentially up into that 100k level, which I've been discussing quite a bit, then we can look for some alt rallies and for some things to recover, and maybe this gives us some sort of lower high bounced move up to de-risk into. If your bag's underwater, I think if we get this push up here, it's going to look good for that. But anyway, I'm jumping ahead of myself here. So as it stands, we came down, we tagged the 80k level. Look at the buy up we had. Where did we come into? The developing year value area low. Are we rejecting there? Well, we're fighting with it. That's the important thing so far. So what we want to see from here, obviously, like I said, we'd like to see a range form. But in terms of the bull bear line in the sand, if we start to accept back in developing value area low for the yearly, that paves a way for a markup, a move up into that 100k level, which is developing yearly VWAP and also the 365-day rolling VWAP in here. So a lot of confluence there. I expect this is where we sort of round off and can sort of look at this as like a lower high scenario potentially. It would still even be like a lower high if we got up here, roughly around 105, 106k, and rejected there at the supply level. But what I'm seeing at the moment, if I'm just playing these dynamic levels, we do get that rotation up. I'll be looking to open swing shorts because we are now in a macro downtrend. Swing shorts here, possibly targeting lower into these bands. If we start accepting back inside previous year's value, then we can look down to around the 70k to 65k level. That would be previous year's VWAP for a move down there. But getting well ahead of ourselves there. Let's switch to the quarterly. All right, so the quarterly also, you can see we have accepted back in Q2 value at the moment. Now, if we do accept in here and stay in here, we're looking for potentially a rotation up into Q2 VWAP, which is around 96.3k. I quite like this level here. We also have developing quarterly down here, just at 93 let's just say 94. So pretty much anywhere in this block here is where I'm looking for a move up. You can also see we have the confluence there of this very nice supply level in here. So this is kind of my line in the sand for if we do get acceptance into this yearly, we can go to the quarterly and we can see sort of the first targets to look for. Now we can obviously see on the quarterly it's been very well respected, right? This was Q2, we bounced here, we dove inside, came back, reclaim, retest again, bounced again. Now what happens when we got back inside that value? We bearishly retested it right at that exact point where it bounced so many times. Came down, we sort of compressed, bracketed under the VWAP, and then we've come down, deviated under the low, and now we've accepted back inside. Had a very nice retest there just in the past 24 hours. Onto the monthly, you can see also, as I said, with the yearly, we have this current resistance here. We are just expecting a sort of bracketing period between these 2 points. We're also coming into the monthly developing value area low here. So you can actually also see on the H4, we have this breaker here, which is lining up with this FVG, which we're just starting to fill. So this is where we've seen the rejection this morning. Once again, it's just like the quarterly, just like the yearly. We get that acceptance in here and we're looking for a move up. So there's a lot of confluence for this point. You can also see here, if I switch just to clean price chart, also have the H4 trend, the H4 money noodle, which has been capping price the whole way down. Obviously, very reliable also. Rejections higher as well. Did have this deviation here. We pretty much closed back under it, gave it a bearish retest, sold off, bearish retest again, bearish retest here at the range high, and now we're sort of fighting to get above it. So kind of the line in the sand for me right now. I know VWAP becomes a bit confusing, especially if you're new to trading because there's a lot going on. Right now, this breaker here, this lines up, it's roughly, let's say, 88.5 up to 90K. If we start to flip this, this lines up with a reclaim of the H4 trend and a flip of this structure here. So, obviously we have these sort of stacked equal highs up here. We may sweep those and come back down. We might be rotational for a bit. But in terms of like a move up to the points we're discussing around 93.5 and beyond, based on the monthly, quarterly, and yearly VWAPs, then we're looking for basically some sort of move like that could get us up to here. We could look for like a sort of intraday, intra-week trade. But anyway, back to this. So they're the levels I'm looking at right now. If we get that push up, we have 96 here, give or take. I've actually marked all these levels out on the clean price chart because obviously when you're looking at VWAP stuff, it gets confusing to remember all the levels. So you can actually just folder your levels in like this tree system here you have on TradingView. So if I just make all those evident now, you can see here, we're just trading level to level. So in the Mars High Club last night, I left a note before I went to bed and I was saying, if we come down, we're basically up here at the range high. I was saying if we come down and we sweep into this Q2 value area low, I'll be looking for a trade there up into the highs. We came down, gave it a picture perfect sweep, swept this lower here, got in there, pushed up, and now we're finding rejection, developing yearly value area low, which we discussed here. Just going to reiterate these things for you guys because, like I said, it does become confusing. You can see that level right here, so it's developing yearly. And also lines up with the previous week's VWAP. We haven't gone over the weekly yet. Weekly is just down here. But you can see this is the previous levels we have so far. So we came up, we pretty much deviated above, and we rejected back below. Now we're sort of giving it another bearish retest here. At the time of recording, I'm sort of looking for this to push up here. We can look for rotation into the highs. If we don't get that, we start to reject down. We look for rotation into the lows. Now the lows currently on previous week's VWAP are 84,500, and the previous week's value area high is 92,200. So these are the levels we're playing with. I'm just trading level to level, and I've been having a very good time trading level to level because it's all you sort of need to do, especially into this ranging period. What you want to do is mark out all these levels, and then you're just looking for trades to occur around them. So basically triggers. So we basically got that sweep here. That gave us a rotation over the highs. You can take profit there. Now we're rejecting at that H4 breaker I was discussing, at the H4 noodle, the H4 trend. Potentially this opens up for a short right here. So you can hedge your position if you took some sort of trade from the lows, or you can just fully take profit, but potentially it's going to give a short trigger here. Now maybe we sweep these highs and give a short trigger. I already think, pushing back below, breaking market structure here, we're getting this sort of bearish retest. If we start to accept in here, we can look for that rotation back down to the previous week's value area low. We start to lose that, we can look for the previous year's value area high again. Very clean levels to trade. Now, if we just reject from here, you don't catch a short, you can still look for long triggers down here to occur. And sort of what I'm doing at the moment, I'm just setting alerts on every one of these lines. And when price gets there, I look for triggers to take positions. Now, like I said, with VWAP on the yearly, we can pretty much just draw out what I said before. We have a range low here. Now we need to see where the range highs form. So potentially this might be our range for an extended period of time. So if I just get rid of the indicators here for a sec, we didn't just bounce straight out. We chopped. This is the weekly chart, right? So we had a few months of chop down here. Consequently here as well, we had a big push up, then we ranged for a couple of months. Big push up, range for a couple of months. Big push up, range for a couple of months. Then we died, then we came down and ranged again. Then we pushed up, what do? We ranged for a couple of months. Up here again, another push into all-time high, ranged again. So we can expect right here, if we're coming down, we can expect this to be the same scenario. Now, I know this chart looks ugly right now, but you can sort of see how these things work. There's accumulation and distribution ranges. So that's why I think, potentially the bottom is in. So I just go to something like the 4-hour chart. There is every possibility in the world that was the bottom right there at, let's say, 80.6K. Now, people could say it's the bottom on the timeline, and it may well be, but it doesn't mean it's the bottom for time. It may be the bottom for price. We could actually do this for 4, 5, 6, even 8 months like we've seen in the past. Before the Trump inauguration, we ranged for 8 months before pushing into new highs. We might just do this the whole time and leave this low intact and never raid it before finally pushing out. So I think a lot of people will be like, all right, I'm going to miss the bottom if I don't long here. They're trying to long into the top of the range. You can wait. You can, buy when we come back into the sort of discount zone, which is, halfway through the range, the equilibrium, the EQ, whatever you want to call it. But, right now we're at the top of the range, so we're pretty much in a premium. But, if we do come down here, there is a high potential we just leave this untapped. Ideally, I'd like to see us run this, get back inside, and that would give a very nice long trigger, potentially targeting up to, the range highs at least, maybe that 96K level, maybe 100K level, the big line in the sand. But there's nothing to say we can't range for a long time without actually sweeping the low. So that's why having these dynamic levels marked out and playing level to level is very good, especially for this market, because you're not just waiting to catch that home run, you're taking small intraday trades and taking profit at logical levels and entries at logical levels as well also. Now, there's one more thing I wanted to cover. I'm not going to bother covering alts. Obviously, there's some are doing pretty well. We're seeing things like Fartcoin, things like Avicii doing well, but they're the outliers. If you catch those, you just look for the continuation plays. Bank Ice analogy, you want to take profit quickly on them. But what we should also point out here is we are also bouncing at this old composite range over here. So we marked out that bracketing area before. If I actually just draw where that started from here to pretty much here before it broke out again, we can see if we extend this across, let's just draw a box between the value area high and low, which these 2 points here. You can see that's exactly where we're bouncing right now. And you can see we're rotational between the high and the low. So this is I'm not even sure what this is. I just caught it this morning when I was going through the charts. This is like a 50-day range. So basically, this is our low, this is our high. And you can see the reaction we've had at both of those. We bounced off the low, we're rejecting at the high. So like I said, if we do range, you can actually draw it based on this old profile over here, this old composite profile. We might just range between these 2 points for a while. And I think that's perfectly fine because what will happen then, the H4 trends, the daily trend, the H12 trend, they all start to come down and flatten out. And as we range in here, we look to break above that. The market sort of needs to heal, needs to take its time to get its bearings again. If we start to break above that, the trend starts to curl up, then we can look for that new trend to be established and we're riding it the whole way up. You can bid retest on it, you can just, buy in here and wait for that flip. Personally for me, I don't really buy below it. I generally wait for the flip. I'm happy to buy higher. I just want to buy in confirmation, so I'm not sitting in drawdown, staying up at night, wondering if I'm going to have to capitulate my position or not. I'm pretty much just waiting for that confirmation of strength, and then I'm getting on board once it is established. This should be drawn out in TPO chart, which I haven't done in this, but you can just use the fixed range volume profile, which is a free tool. It is in the projection tab. So over here, you can see fixed range volume profile. You can pretty much use that, and you can just mark out those 2 levels there, and you can actually just delete that after. But just mark out these levels here. We can see that is basically 81,200 and 88,700. Now, if we just come back to an hourly chart, we pretty much have our levels there. And we just know what we can trade. So quite simply, you don't even have to use VWAP. You can just mark out that old composite range. You can even copy these values I've got across here. And we're just looking to basically long at the lows, take profit at the highs, maybe open a short, rotation back to the lows, so on and so forth. This is the range to play right now. And once again, if you want to wonder where the line in the sand is for the bull bear pivot, where we can resume bull market stuff again, then pretty much to me, it is this level up here. At 100K on the money. That's where yearly rolling VWAP is. That's where developing yearly VWAP is. If we get above that, we get above this supply cluster in here. So you can see there's quite a big amount of supply there. Flipping this zone up here, this is where I think we can talk about bull market being back on, all-time high being on the cards again. But until that happens, I think what's likely is we come up here, probably reject here, come back down, and that could actually form a bigger range. So just let me get rid of this stuff for a sec. Let's just say we do come from the lows up here and we form some sort of high up here. That will just open up yet another range. So although we're looking at the range in this bracket down here right now, we could come up and do this and continue this as a range for an extended period of time before we finally mark up above that. Flipping that is where we can say maybe bull market's back on, and that's where we can look to target all these highs up here. And you can pull out your price target extensions again, whatever they may be. I don't really have them. I just sort of play price as is, but that's sort of how you should be looking at stuff right now, and we're just looking for range rotations. I think that's all anyone needs to focus on. Anyway, I'm going to leave it there. I wanted to have a discount code for Black Friday for the Miles High Club because a lot of people have been asking. They are coming. I just recorded the video a bit too early. I'll record another video in 2 days and I should have that code for you. And I believe you're getting a pretty good deal if you want to come and join the Miles High Club where I'm doing all this analysis daily. You get access to all the indicators, plus 7 other analysts. But other than that, please like, subscribe to the channel. I want to get to 5K pretty soon and we're on the money thanks to all of you guys helping me out. Other than that, be well and I'll catch you soon. Cheers.